Hello, everyone. Well, an ugly morning as we broke down below the 200 SMA turned into a hammer candle reversal at the 200 SMA. Now, everyone feels and talks and sounds extremely bearish out there. Now, I don't see capitulation, and I think we could still go lower. But the bottom line is, I felt that if I didn't step in and buy some names in my long term portfolio here, that I would really regret it if this hammer candle off the 200 SMA leads to a V-shaped move to new all-time highs. So I asked myself, tier 1 positions off the 200 SMA today with the hammer candle reversal forming into the close, is that going to be, am I going to regret not doing that if this market goes higher, or be upset if we go lower and I got to do tier 2 or full tier positions in these names, long-term holding names? To me, the risk out, the reward potential definitely outweighs the short-term risk. So I stepped in today and bought 9 stocks, added or bought. There were a few that I didn't own yet in my long-term portfolio. I bought those and added. So there was like 2 that were brand new that I don't have any shares of. I bought those and I added to 7 other stock names, and I bought 1 ETF. I'll show you guys that ETF in this video lesson as a thank you for watching it. But those long-term portfolio buys are only for quarterly and annual platinum members of the website. And I bought a brand new name yesterday in the long-term portfolio that's a large cap healthcare AI related name, brand new position. I'm pretty sure that's going to be a 20-year hold. And today I went to work. So I already own IGV in my long-term portfolio. I added to this ETF today based on that 200 SMA reversal. Now, where do you think my next operation is? Right, if we get a reversal candle going into the close off the 500 EMA, tier 2 size into this name. If we undercut the 500 EMA and go lower, once we reclaim the 500 EMA, full tier size add. But if IGV just V ramps to new highs, I felt that if I didn't do something today, I would definitely regret it. So tier 1 positions in 2 or 3 brand new purchases, tier 1 positions in 5 to 6 ads, and then bought this ETF, as I believe that the artificial intelligence revolution that is coming, just like the internet revolution of the 90s, is going to be more beneficial to the software stocks, and the hardware stocks. It's Nvidia's the king, but I just feel like it's software, 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 software. It's always been software with me anyway. So the market bounced off the 200 SMA today. It's officially day 1 of a new rally attempt. I don't think there's anything special here. We're going to look at the long-term and shorter-term moving averages on Telechart version 25 after we're done looking at these charts, and you will see that the downtrend and the slope of these moving averages indicate that a lot of work's got to come. The QQQ, nice reversal, but we're still closing below the 200 SMA. Now, to do a 200 SMA reclaim buy on the QQQ, need a full candle, wicks and all, below the 200 SMA. That's red. Today, I don't even know if that wick, so that wick was above the 200 SMA anyway, but today wouldn't count because it's not a red candle. But good reversal, not as good as the SPY right off the 200 SMA, but still a reversal candle nonetheless. And I looked at the accumulation distribution charts on stockcharts.com of the SPY and QQQ, and you can't tell me that we're distributing stocks instead of accumulating stocks on the way down, because despite all of these indices having lower lows, except for the DIA, which is holding up above the recent lows, while this has lower lows, the accumulation distribution line from this low to this low on stockcharts.com, if you take a look, you will see positive divergence in every single one. Not one single accumulation distribution line of the QQQ, IWM, or the SPY is lower than the low in January 2025. So on top of that, there's other bullish signs out there. It's not all dire out there. I noticed Vert yesterday trying to hammer out a support low. LNG looks very similar today. I know it's not the stocks that we want to see all across the board, but still, there are some hopeful signs. DE, which is actually a revolutionary farm and construction machinery company, they like to use artificial intelligence and robotics, and I like what I see there. They're looking really good. The relative strength line at the bottom panel of the chart shows the story there. MLI off the 50. IDCC is holding up after that ER gap up. CHKP flagged this one for members yesterday, but showed that it was a slightly extended from the 21 EMA and 50 SMA. And in this tape, without a follow through day, I can't personally take it. But that's great to see today. So more positives. Then VEEV, very nice reversal. I have a new long position on the swing side that I'm willing to risk a full 1R the account capital to the trigger price to my sell stop initially, which should allow 20% of my account capital to go into this name, even in this market environment. And we'll review that one here in a minute. But VEEV is another one I'm watching. Would love to see a handle form out here. PLMR in the insurance group had some reverse today, but others look good, like PLMR. How does Lemonade look? Because that's another one that I'm watching. That one still looks good. And then off the 50, MRX today. Look at the little volume surge. And then this stock, Gen, caught my eye. Got to do more research into it, but I noticed it's a computer software stock, security stock, over $25 per share. I'm interested, but I need to do more research on it nonetheless. But there's other names out there. My favorite one right now that I'm stalking, WGS. Look at the, I guess, base on base that it's forming on this one. This one is at the very tip top of my watch list. ASTS is another one. I kind of have a weird long triple bottom with handle forming here. I really like this one. And then Uber, which is in my long-term portfolio, I noticed that that one is holding up well. So that's all that I believe I want to look at with these charts. Let's go ahead and go to Telechart version 25, and I just want to show you why it's not perfect and why I wouldn't call a bottom here. So the first support level I was looking at that initial rally attempt off of was the gap fill from the election of Donald Trump. So that was the first support level. We broke it. Now that we're at the 200 SMA, this is actually the EMA on this chart. This is the 200 EMA. You can also see it kind of lines up where we wicked today, right at this key breakout. So we broke out above these highs. It became support. We rallied further. We're finding support at that level. Now, what's going to be more convincing to me to believe that we have a short-term bottom here? When this TTM trend momentum prints two pink bars in a row instead of deep red, that's whenever I can start to trust a potential rally attempt. As you can see, we're deep red with the TTM trend momentum. So there's no indication of a turn there. The best thing that would happen would for us to go sideways a couple days, then get that TTM trend turn, and then you can definitely get to work risking just to this low. Oh, it moved on me. Darn. Risking to today's low a day if that would happen. But you can see the TTM trend momentum indicator with the QQQ is still red. IWM is still red. DIA, there's your pink bar. So now that you have a pink bar, if you want to play a potential market bottom, you had a pink bar here on this day. You have a stop right here. You get stopped the next day. It's how it happens. But now that you have that pink bar, it's also near basically support. If you consider this an undercut and rally, which is also near the 200 SMA, you have a confluence of levels to work with. So I like this reversal on the DIA. I am not going to personally play it, but if you decide to do it, you could easily get long on Monday with a stop below this low. Now, I am going to take a new long position on the swing side. ZS is giving me an inside hammer candle after an earnings gap up. It had basically a shooting star candle yesterday, and it's still within a deep consolidation pattern. But this basically, it's kind of an outside, I guess you could say. Undercut of the lows, reclaim, hammer candle, big wick. I want to get long above the high of the day, and I'm willing to risk to this low the 50 EMA or the 50 SMA. But I'm going to at least be putting 20% of my swing account capital into this name. But ZS, very nice setup here. Got a pocket pivot point signal today too. 99 EPS rating. Relative strength rating is only 82, which is why its composite rating is only 91. But I have a feeling this is currently number one in the security software industry group now. It is the new number one. I have a feeling it'll have a 99 comp if and when, not if, when the market does move higher. So amazing earnings and sales growth. They beat on the top and bottom line, raise guidance. That's pretty hard to do in this current earnings season. We haven't seen a lot of that. So ZS is going to be my new long. And then just to take a look at my squeeze scans, TGI is on my daily squeeze scan. Unfortunately, TGI is already a buyout. So there are 0 stocks in my daily tight squeeze scan, where on the weekly time frame, I'm triple green. This is splitting hairs. That's why that's happens to be red, but it doesn't matter. TGI is not in play. And on my weekly squeeze scan, there's just TPC, and then we've already talked about ASTS and WGS. So WGS and ASTS are in my weekly squeeze scans. I really like what I'm seeing here. I just need the market to cooperate better. ASTS at this point is actionable off the 21. WGS is also actionable off the 21 EMA, but I just don't have enough evidence that we're ready to go for me to get long without either a pocket pivot point signal, a volume surge signal off that 21 EMA reclaim. If we were in a strong uptrend, I would definitely get long here. So we went over a lot. Bottom line, on the swing side, new long position, ZS, risking 1R of my account capital, probably get 20% of my account capital into this name of the total account capital with that 1R risk unit. Adding finally to long-term portfolio names. We'll see what this market brings. I have a feeling all this noise we've been listening to with tariffs lately is going to end up being a big nothing burger. Let me know what you think in the comments section below. Have a wonderful rest of your weekend, everyone. Aloha.